we have the duty to actually make sure Bitcoin fees are generated. And like, this is my favorite thing about Stacks is that we made it a part of our consensus mechanism from day one and never pivoted.
Rena,
Good
welcome.
morning.
Good
Hey,
morning. Good morning. It is, we're both managing through this morning after a wild ETH Denver.
honestly, we threw a fabulous event yesterday. I must say.
Did. We were partner.
We
We
partnered
co-threw
for
a
an
party
event. It
last
was
night.
a phenomenal party, and it really showed like Bitcoiners show up in full force at an ETH conference.
It was wild. It was Bitcoin Denver. It's
I
not
know.
even ETH Denver anymore. It's Bitcoin Denver.
The rebrand was great.
The-
That was needed.
The head of content at ETH Denver, who helped me organize the Bitcoin Summit, she was like, "This was a wild success. We've got to go double hard next year on Bitcoin at ETH Denver." Like,
I love
Bitcoin at
this.
ETH Denver's a thing. Yeah. So that party last night was pretty awesome. But anyway, thank you so much for
I appreciate you inviting me.
rallying this morning, myself included. We needed the coffee. But yeah, I'm excited to chat a little bit about Stacks and sort of the unique position that I think that Stacks plays in this Bitcoin season 2 landia that we're in. It's interesting because we were sort of chatting about this off camera. Stacks is one of the few kind of major established organizations that has really made an interesting and new name for itself in Bitcoin season 2, but also had this incredibly rich established history well before Ordinals in Bitcoin season 1, and was talking about Bitcoin DeFi and programmable Bitcoin and all of these things that now are much, much more commonplace, I think, to discuss way back in the day. And so I thought maybe we could start with a little bit of the history of Stacks and talking about sort of how Stacks came to be, what the intention was, how you saw the development of programmable Bitcoin or DeFi on Bitcoin kind of come to life even before Ordinals. When remind me just to start, when did Stacks birth and how did you get involved with Stacks?
So Stacks was established really early on. It started off, actually the research and development started off in maybe 2014, 15, like very early, but it didn't actually like fully form until like 2017, 2018 on like what it was actually going to be. So Stacks started off as a project as like a user-owned internet, and it had always had like a tie to Bitcoin no matter what. When you think about crypto blockchains, there's nothing quite like Bitcoin. And like we always think about BTC with the asset, but we kind of disregard BTC, Bitcoin as like a network. But the network is so powerful because it's decentralized, it's secure, it is coded hard with proof of work. And a lot of people forget about that. And so when Manib was thinking about creating Stacks and wanting to do a user-owned internet, in his eyes, there was only Bitcoin. That was the only option that he ever thought would be the right building block to kind of create the next wave of the internet. And so he had started this project while a PhD student at Princeton, distributed systems, computer science, so like big brain energy, let's put it that way.
Sounds like
And
it.
as he was thinking about how to scale, he had this idea without knowing what an L2 would be to scale Bitcoin. And that's really what came about. And the team had been working on this for quite some time while doing their grad school. And Stacks actually did a Reg A token sale, the only regulated token sale in America with the SEC as a qualified offering in 2019. And from there on out, once they raised the capital and such, Mainnet was birthed in 2021, I believe.
Wow. And that was, were you around during the days when the discussion about whether or not to launch the token as a regulated token with the blessing of the SEC? I mean, how was that decision made?
I unfortunately was not with the team
Oh.
just quite yet. I joined Stacks, the Stacks ecosystem in 2022. I was previously with Finance US during that time. But since I was at Finance US that time, I have a fair understanding of how tokens get listed on exchange because that was part of my purview at Finance US. So I believe from what I understood from Minib at the time when he explained it back to me is that when you want to do a token sale, the decision was he didn't want to exclude Americans. And that's actually key and critical. So he did a qualified offering in America so that if you were a qualified investor, you could actually buy the token. And that hadn't really been done before ever. But the commitment was if you're building in America, you should be able to provide in America. And he never wavered from that.
So this is something that I think is important for folks to understand. So as of right now, even accredited qualified investors cannot just go and buy random tokens, or is it that people who are distributing tokens can't market those tokens to Americans? Like when we see these tokens being launched and Americans holding them, that's basically happening like black market style with like VPNs and stuff, generally.
Yeah, so every exchange kind of makes their own determination on the how we test all four prongs of whether a token constitutes as a security or not. It is a very extensive process to go through whether the token has utility, whether there's a common enterprise, whether you and the common enterprise are able to increase profit or something of that nature. And so every exchange will have their own framework. In the US, the framework is pretty clear across most of the major exchanges. But with that being said, you should not, as a token project, be marketing as the price of the token, what the token might create, things like that. That's really not um, in the guidelines of the Howey test currently.
Mm.
The Howey test really needs a update because it's the same rules from like 1930s. Just saying. And so I hope that there's a new framework coming in place.
Sounds like there might be.
I hope so.
We hope so. I'm curious though. So does that mean that Stacks, through the Stacks token launch, you were able to sort of bypass some of the limitations that other tokens are dealing with by not going through, I'm sure, the headache of, getting the blessing of the SEC?
A little bit. It is a blessing and a curse all at once, per se. So when you do a SEC qualified offering, you essentially have to go through a multi-year process with the SEC to prove that you're decentralized. So this is a good point. Most tokens say that they're decentralized. Stacks actually proved that they're decentralized to be from a qualified offering as a security to a utility token. And so when after mainnet, when the project was launched, essentially many entities were created in Stacks that actually took different components of what generally a centralized foundation or a centralized devco would do. So the treasury was broken up accordingly. So this is fun, there actually isn't an entity in Stacks that holds the majority of the Stacks treasury. So it was purposely broken up, purposely used to seed multiple projects and everything like that. So Stacks operates decentralized, like there isn't a single labsco, and actually how I contribute through Stacks is leading a working group. So we do everything in public through working groups. So you can think of a working group for business development, a working group for DeFi, a working group for core development. So it is fully open sourced. Everything's on GitHub, meeting notes and all.
Well, and this is an interesting thing that I want us to circle back to is sort of how the ecosystem of Stacks
Yeah.
functions and sort of what best practices are there for folks who are building networks from scratch. Yeah, it's interesting. I was chatting about this with a friend of mine from Puerto Rico who I won't name, who is former consensus
Mhm.
on the Ethereum side, and he was sharing that one of the things he's most excited about for 2025 is for the government to actually define what sufficiently decentralized means.
Totally. There is no clear rules, and Stacks had to chart its own history with the SEC kind of on the other side. And I have to give the ecosystem credit for figuring this out and really honing in on taking different components and making sure that there are different people, different contributors. Anybody can contribute to our ecosystem.
Did they have clear definitions at that point when they determined that you were decentralized? I mean, were there clear parameters or did they just kind of make a judgment about Stacks in the moment and that definition is still pretty loose?
I'm not entirely sure, but essentially in July of last year, so July of 2024, give or take, there actually was a public notice from the SEC that um, they no longer are looking into Stacks and like we have charted and proved the course. And that is the first of token projects to do that. And especially being American made, American first, like it is huge for us. And like we're really proud of the work that we put in because if you were, let's say, an offshore token with the foundation and such, you probably didn't have as many restrictions on how you market, how you have a centralized treasury where you can spend a ton of money on developer growth, incentives, things like that. So everything Stacks had to do, shoestring budget per se. Like I think in the qualified offering, maybe 37 million was raised. So not much for a crypto project to have to sustain ongoing
build all
development
this infra.
to
Yeah.
build everything when you see like token projects raising 350 million, all of that, and also not having a huge treasury either. And so everything built on Stacks, organic.
How important was the like accrual of value of the token, right? Like the increase in value of the token over time to making sure that these operations like remain functional and sustainable.
I think there is a lot of accrual value that came to the token and such, and like Stacks is a unique positioning. Obviously, STX, the token, is used as gas on the network to sustain transactions and such. But what's more interesting is the consensus mechanism of how STX comes into play for Stacks. So when you stack Stacks, the let's say equivalent of like staking, give or take. Um, most proof of stake systems, when you stack the asset, you return back the asset. So when you stake ETH, you gain more ETH.
Mm.
When you stack stacks and are securing the Stacks L2 network, you actually earn Bitcoin. So that is different. And it was a conscious decision to make sure that everything we do as Stacks and supporting Bitcoin and Bitcoin growth contributed back to the L1. And so it is a different style of project of the commitment is we never wanted to go away from Bitcoin. We never wanted to kind of lose that tie to the L1 because the base layer essentially is our homeland and you want to add more value to your homeland.
So this is a great, okay, so first of all, I'm like, yeah, I definitely want to dig into like, where does the yield come from in terms of like, stack stats get Bitcoin, how does that work? But let's just take it back a notch and just kind of overview the Stacks L1 consensus mechanism and sort of what the tie is to Bitcoin, how the consensus mechanism works, just to kind of ground this
Of course.
conversation before we get too deep into the tech. So I mean, how would you describe the stacks like TLDR, stacks consensus? How does it work for like laymen who like maybe have like a Bitcoin understanding but aren't really sure how stacks works?
Yeah, so Stacks consensus is goes through a proof of transfer mechanism. It's a little bit similar to like proof of burn. So essentially, when a new Stacks block is created, you have to write into a Bitcoin hash, and so you are committing to Bitcoin. So it's a little bit different. So as these blocks are created, you're committing your hash to Bitcoin, and then a new Stacks block is kind of mined.
One sec. So when you say committing to Bitcoin, so that means you are publishing the stack state
You're publishing the
onto
Stacks
Bitcoin.
state to Bitcoin, and Bitcoin is the DA layer.
Which is interesting also because now post ordinals, there's so many L2s using Bitcoin as a DA layer, but pre ordinals, I don't know anyone else that was, I mean, were there many projects doing that? That was a
Perhaps
unique
it's pretty
thing.
unique. Perhaps maybe rootstock. I'd have to rethink about that, but maybe
Okay.
rootstock.
But
But essentially, if you wanted to scale Bitcoin, why would you not use Bitcoin as the DA? Like, how could you you can't separate it.
and the DA specifically means, because I think this is important for folks, means you're putting a hash of the stack state,
Absolutely.
not the full state, obviously, which, now there's an obsession with trying to make that happen, but it's incredibly difficult.
Yeah, that's likely not scalable. It's tough.
Yeah, very tough, very expensive. We'll see if anyone pulls it off. Okay, so you publish the stacks state in the form of a hash on Bitcoin, and then is there any like commitment of financial transaction between the two? Okay,
There is. So, as a Stacks miner, to bid to do a new block, you must commit Bitcoin. So, you must actually do a Bitcoin transaction and send Bitcoin in
to
it,
where?
to a burn address, if I'm not
Oh, so you're
mistaken.
burning Bitcoin to create stacks.
Yeah. So, there is a proof of burn. So, you do burn. So, like, it was important in that state because one, you want to add more transactions to the L1 too. So every Stacks miner for every bid must put in an L1 transaction.
And you're deflating the networking, increasing the value, theoretically
Theoretically,
increasing the value of
you're helping
Bitcoin.
the theoretically, you might be helping the value of Bitcoin, however you choose to view it. But yes, and it is you cannot necessarily game Stacks mining too. There is a random verifier, so a random verifier for actually choosing who wins the block. So there are a ton of miners who are committing multiple bids, multiple blocks just to get that token reward for the block.
So it's sort of like if Bitcoin's proof of work is burning energy, Stacks' version of proof of work is burning Bitcoin.
We're essentially recycling proof of work in a way, you could put it in that way, because we are burning Bitcoin to commit to Stacks.
Okay. And then the staking mechanism, when you stake Stacks and get Bitcoin, how does that work under the hood?
So the staking mechanism is similar in the sense that when you're staking Stacks, the Bitcoin kind of accrued through proof of burn is redistributed to stakers.
Oh, interesting. So it's kind of like you can burn your Bitcoin or it kind of gets sent to the stakers as a method of
So,
redistribution to people who stake
and it's
Stacks.
interesting because it's the only project that actually yields Bitcoin, hard
Mm.
Bitcoin. Obviously, the amount of Bitcoin yield varies on the cycle. Each cycle is 2 weeks. But generally, historically, it's been anywhere between 5 to 10%, given just on the times.
5 to 10% in Bitcoin?
In Bitcoin.
That's pretty good yield. What are the trust assumptions involved with this?
The trust assumptions are fairly like de minimis at this point now. So, one, with the new Nakamoto upgrade, our consensus mechanism has gone through a little bit of an overhaul for the better.
What did it used to be? Because I also am curious what happened with the Nakamoto upgrade and kind of talking about that transition. So, what was the old mechanism? And then maybe we could.
The old mechanism was exactly of just proof of transfer and proof of burn, like quite simple and such. But the new mechanism is a little bit different because now there is a validator set, a signer validator set who are validating transactions in the Stacks network. Prior, it was just the stackers verifying and validating the Stacks network. So now we've introduced an upgraded, kind of more elevated approach where there are the stackers who are securing the consensus and validating on the network and independent signers as well. So
Okay, so you have additional security layers
because
with the Nakamoto upgrade.
exactly, and it also introduces Bitcoin finality as well. So anytime Bitcoin reorgs or forks, Stacks must follow suit. So in order to reorg Stacks, you must reorg Bitcoin, which
was previously not the case. So
correct. So it
previously,
was very important to make sure with the new Nakamoto upgrade to go in that direction. So we are essentially have Bitcoin finality and the hash power of Bitcoin kind of behind us.
interesting. But there historically was never like a situation where, Bitcoin would fork. I mean,
Right. That was why the Nakamoto upgrade was needed to make sure that that commitment was there.
that never happens.
But I don't think that many other Bitcoin scaling solutions goes in that direction. Like it's taken some time to build towards that.
To make sure that
That you
you're
have
also reading the Bitcoin network,
reading and
basically.
publishing to the Bitcoin network.
Okay, interesting. Whereas most L2s, they're obviously working on publishing to the Bitcoin network, but they are not necessarily reading.
They're not
that.
reading the state, but from the genesis of Stacks, you would always read the state of Bitcoin.
Okay, interesting. Okay, so then this sort of leads me to my next sort of technical overview question. Prior to Ordinals, you guys identified primarily as an L1, I presume. I never really heard of Stacks being called an L2 prior to Ordinals.
Yeah, so I would say we were probably best considered as like a Bitcoin sidechain. Maybe that would be like a fair assumption, but
That was the term everyone used at that. I mean,
yeah,
technically, most of these things are side chains.
and
Yeah.
that's okay. I think
Yeah.
truly there really is no Bitcoin layer two. Like it's impossible. Bitcoin doesn't have like a programmable VM or anything like that. So you're never gonna have like the exact comparison of what you get in Ethereum. But I'll defend and say all of us are trying to scale Bitcoin. So we actually coined the term Bitcoin layers just to make it a little bit more um, adaptive for everyone kind of building in the space. But pre-ordinals, once we saw pre-ordinals, we had fundamentally believed that Bitcoin needed apps no matter what. And so we spent a long time building kind of a robust growth marketing strategy of creating content on what Bitcoin DeFi could be, what Bitcoin NFTs before ordinals was the thing could be, what Bitcoin lending markets. Like we spent a tremendous amount of effort showing that the possibility of because Bitcoin is hard and it is a pristine asset, what happens if you used it? And we felt so strongly about this because actually this was Satoshi's entire vision from the get-go. So I don't know if you've read some of the old Satoshi chats from like 10, 2011. But Satoshi always believed that Bitcoin would be a great economic security base layer and that value should be created on top of it. And that's Manib's entire vision, the Stack's entire vision of creating value on top of Bitcoin, but secured by the base layer.
Interesting. This is sort of like somewhat controversial, right? Because the maxis, of course, will say that, Satoshi was like a monetary maxi and he intentionally didn't want things like opcap, for
Of
instance,
course.
in the scripting language. But you would say that is not historically accurate.
I would say, look, Satoshi created an asset in a blockchain network, and then the people decide what it's going to become. But there is a chat history message. I'll have to pull it up for you. Like I know it's somewhere on Twitter that we've
We'll
screenshotted
link
it,
it.
but he just said it might be the most secure base layer or economic value, and to build on top would be a new economy.
Was that the original intention of Stacks to essentially actuate something akin to DeFi on top of Bitcoin?
I think it wasn't the original intention, but that is the mission now. So the original intention was to create a user-owned internet. If you're going to create a user-owned internet using blockchains, you want to build on the best blockchain, so Bitcoin.
A user-owned internet, meaning like, I mean, I guess that's also what Ethereum was attempting to do at the time, the world computer kind of vision.
Exactly. I think that was maybe the original genesis of where Stacks wanted to go. But building on Bitcoin is incredibly difficult, and to create a VM that aligned to Bitcoin was challenging. And so as the development continued in carry, and actually the price of Bitcoin continued to appreciate, you kind of think about what Bitcoin should then be used for. And really, like, I truly think Bitcoin is the only thing in all of crypto that has product market fit against the US dollar. And if Bitcoin has product market fit against a depreciating asset, then what would you want to do with what would you want to do with that pristine hard asset? I may want to lend against it. I may want to borrow against it. And it really cemented actually Bitcoin is digital money. Bitcoin is digital inflationary hedge. And so what you do with your Bitcoin is not going to be a user-owned internet. You might want to narrow focus.
So I want to definitely put a pin in this and circle back to lending because I know you guys are about to launch a pretty interesting lending product
We
on
just launched
Stacks.
one last week. Yeah.
Hell yeah. I want to get into that because that is my personal favorite use case for DeFi. And we've spoken about
Of
this
course.
quite a bit off camera. So I want to circle back to that. But before we do, I want to kind of continue this conversation and sort of getting the ground tech down. So, this sort of transition into focusing from the sort of the world computer idea, if you will, into DeFi, that probably happened when, like 2017, 2020? Like when did that shift occur?
Probably around like 2022, 2023.
Okay,
Stacks
interesting.
only went to
Like
main.
DeFi summer,
Yeah,
basically.
Stacks only went to mainnet in 2021. So like
Okay.
once the everything was built and you have uh, a good VM and a solid like environment to actually do execution.
And Stacks has its own VM. It is the Stacks VM that was like
Yes.
uniquely built for this. Okay.
Yes, we tried to I think Benebid tried to do something using Bitcoin Core and Bitcoin Strip, but it just didn't have the expressibility that you needed. If Opcat was there, maybe it could have been possible.
We'll have to double click on that as well. One of my favorite questions for every guest. Okay, so DeFi summer happens. You guys are kind of focused on DeFi. What were the conversations like around Bitcoin DeFi at that time? I remember Dan, he said that he had published a big paper about sort of like his thesis around Bitcoin DeFi. What was the thesis? What were people saying back then in 2022 about Bitcoin DeFi?
I think the entire thesis is very simple. Can I make my Bitcoin productive? Really, that's it. Like, we're in this market of we buy Bitcoin, we hold Bitcoin, we will never sell Bitcoin. And if you're going to have this asset that's going to be your generational wealth in your family's future, what would you want to do with it? Now, if you think about like the traditional equities market, when you're doing a mortgage loan, you might get an equity loan against your assets in your portfolio. Why can't you do that with Bitcoin? Why can't you use something that's so meaningful and a commodity to be actually used to increase your net worth and your value?
So that, I mean, the two like main use cases for making Bitcoin productive without selling it would probably be like lending and staking, I imagine. On the staking side, we'll get to lending
Sure.
later, but on the staking side, have you guys ever thought about doing like a Bitcoin staking product rather than like stack staking for Bitcoin, which is also obviously cool, but have you thought about that?
It's definitely in the potential roadmap in the future.
It's on the brain.
It's
Okay.
on the brain. No, I think there has been a lot of interest in the idea of restaking in Bitcoin because you have $1 trillion in Bitcoin,
Babylon.
more. So you have $1 trillion in Bitcoin. If you're going to use something for economic security, you want to use the most liquid, deepest asset, BTC.
Totally. Has that become a deeper conversation more recently in like a post-ordinals universe?
It's definitely become a recent conversation. It's a pretty important concept, but if we're going to do Bitcoin restaking, you want to do it right. So currently in, let's say, restaking in the eigenlayer kind of adjacent, I don't believe slashing has been enforced or that type of mechanism. So you want to do it where it is right by kind of the entire ecosystem. Otherwise, you're just giving away free money.
And again, it's sort of a begs the
You're
question,
giving
where does
away
the yield come
you're
from?
giving away free money or free yield, and the yield may be in other assets, so other POS chains, points, or whatever it may be. But if you're going to stake with Bitcoin, then you should yield Bitcoin. Full stop.
So, I mean, fair point. So at what point did you guys start using this layer 2 language? Was that sort of in response to, I mean, like, well, let me back up actually.
Sure.
Ordinals happens. I consider sort of pre-ordinals like Bitcoin season 1 and post-ordinals Bitcoin season 2. And Stacks had a
Totally.
really interesting kind of trajectory both in season 1 and season 2. Ordinals happens. Stacks was
We came out in full force for ordinals.
inarguably the first ecosystem to really fully 100% embrace ordinals. I mean, to this day, most of the most like critical infra ordinals projects are Stacks companies.
They're Stacks projects. So when ordinals were being conceived and the kind of papers and such were developed and published, it was a conscious choice on Stacks wallets who already supported BTC. So Stacks wallets like Leather and XVerse always supported STX and Bitcoin to add ordinal support for day one.
Yeah. XVerse, Leather. I mean, there's a bunch of super important Hiro, which Hiro is now Leather, but Hiro was
Hiro does dev tooling. They were actually the original Blockstacks that actually created and did the first development of Stacks.
And they were early indexers of
Early, so
everything.
Hiro runs ordinals APIs, indexers, how to code in Bitcoin and such. Just a lot of projects really wanted to support a creative aspect of Bitcoin. And like ordinals, I think mean a lot to me because most people think of ordinals just as art or PFPs, but I always think of this is the hardest decentralized storage that you'll ever have because you're writing in Bitcoin. So it's well known that when my father passed, I inscribed every voicemail of my father because if my iCloud is erased, I will never have the voicemails of my belated father. So now my dad's voice is on chain. I've run a Bitcoin node for multiple years and I'm never going to stop running a Bitcoin node. So my node and the people's nodes will be able to preserve my father's legacy.
Wow. I did not know that story, Rena. That is quite touching.
Like it's not all about earning yield,
Degeneracy.
money. No, it's not about that. It's about what you make of Bitcoin. And if something is important to you, you could put it in something centralized that's hosted through AWS, or you can put it into a network that was built by people to preserve what the people need.
The most immutable, uncensorable, like forever ledger that could possibly exist.
So yeah, my dad's voice is on chain.
Wow. Wow. But I mean, it really sort of gives new breath to this idea, I think, of like, in my opinion, ordinals gave a whole new life to this concept of data availability on Bitcoin.
Absolutely.
Like that to me is actually the real like critical thing about ordinals is that it inspired this new understanding of Bitcoin as a database, which from there, I think, arguably, most of all of these, a lot of these new Bitcoin L2s, however you want to define that, they're dependent on this. I mean, even things like BitVM and various other like new tech on the L2 side were completely dependent on this concept of like being able to print data on Bitcoin, which ordinals I think really took to a new level. So at that point, right? So Ordinals happens, Stacks comes into full force, basically built most of the infra that Ordinals users still use today. XVerse is a really great example. I think
Absolutely.
Ordinals is what, like 80% of Ordinals are held in XVerse wallets or
That's
something like that.
probably, yeah, that's probably fair. We're running the wallet support, we're running the infrastructure, the APIs such that you can have that Gamma marketplace that, oh, is it originally
That's right.
Stacks
That's
NFT marketplace?
Stacks company also.
Yeah, a Stacks NFT marketplace, full force on let me pivot and have ordinal support on day one too. And it's a really interesting experience because now you have an area of you can do PFPs, but you can also do high-end luxury art. Because if you're an artist, you might have in the past done an Ethereum NFT, but why wouldn't you do something that's so special to you on Bitcoin? And so Gamma was one of the first to pivot to have ordinal support.
Well, or on chain, period, right? I mean,
Absolutely.
Ethereum NFTs, as you and I know,
Are
most
not on chain.
they're not on chain.
They're
Yeah.
off chain. They're in a server.
They are
But
completely, vulnerable to obsolescence, basically.
but that's what actually brings like when you're thinking about scaling NFTs, that's where Stacks comes in. So Stacks had already been doing this, but now to kind of retrofit to now where ordinals are, and then now give a breath of fresh air of you can continue to do ordinals and inscriptions as parent and child, but you could also consider going the Stacks route too. So there's different options for different flavors of people.
So around this time, I don't even, it's funny, I ask a lot of my guests this, like, when did this Bitcoin L2 explosion happen? Like, from my perspective, it sort of felt like, oh, now we're in this new Bitcoin season two. It's not just ordinals. Now the L2s are
Maybe
blowing
like
up.
late 2023 going into 2024, there was like a fun stat. I think in 2024 January there were 80 L2s all trying to like do the same thing. I think they saw the cachet of ordinals, and I'm not sure how many are in it for they want to do right by the L1 and preserve the L1 and scale it. It seems a lot of them were thinking, wow, Bitcoin is appreciating. That asset is so worthwhile and valuable. I need to find a Bitcoin thesis and pivot.
Do you think that they were incentivized by more investment interest in Bitcoin as a
I
result of
mean,
ordinals?
Bitcoin has become more and more institutional. There is more and more capital in Bitcoin. From an American standpoint, I think there's like what 50 million people that own some portion of Bitcoin. A stat from Coinbase, but Bitcoin is mainstream now. It's almost impossible to have a person not at least know the word Bitcoin. They may not learn the word crypto or blockchain, but Bitcoin brand value.
Did you guys, I mean, at what point did you guys start using this word L2 kind of colloquially, informally to describe stacks? Like, at what point were you sort of thinking about that?
Probably it was like late 2022 going into 2023. So in 2022, we had published two white papers as a update of what the Stacks network would be. That included the Nakamoto upgrade. That was like key and critical in late, it was December 2022 when the
Like the intention, we
the
are going to
intention
do this.
we're going to be upgrading our consensus to be full finality with Bitcoin. There was also a second white paper saying we would be creating an asset SBTC so that Bitcoin can be deployed fundamentally on chain through smart contracts. So we put our intention out there very early.
And prior to that, were you using the word sidechain more often and then sort of pivoted, or
We use really like Bitcoin scaling.
Bitcoin scaling, which is, it's interesting. I had Rich from Core DAO here, and he was sharing, he's like, I don't really like these terms, L2. He's like, I just like Bitcoin scaling. And
Bitcoin scaling is just the right way to think about it. Actually, SBTC, we've never said it was Stacks Bitcoin. We've never said it. It's just SBTC because our in our mind it was always we're scaling Bitcoin.
to what extent, so like, when we think about like defining the word scaling, that sort of means like increasing throughput, basically, right?
We're
Like increasing the number of transactions that can
I mean,
happen.
if you look at the mempool right now, it's quite bare. Like the mempool is, there aren't that many transactions. And if there's no longer going to be transactions, what incentives do miners have to continue to mine, continue to support the network, earn fees? Because look, we're going to have a halving again. We're going to continue to have halvings. So the miner block reward is going to continue to reduce. But we depend on the Bitcoin network. So we need to support it.
Is Stacks, would you describe, so there are several Bitcoin miners that are also mining Stacks. on top of their using their basically reuse of hash? Is it merge mining?
It's a little bit like merge mining, but you still have to do a separate kind of mining instance for Stacks. Like it's a different setup.
Okay. So basically, I mean, this is sort of like another concept that I feel like has come up on several interviews, which is how do you basically pay miners, L1 Bitcoin miners, once you're up there on layer two, right? Most layer twos, don't contribute basically back to L1.
I think that's partially why that when we were like when the consensus mechanism was created for Stacks, the intention was that you would have to do an L1 transaction no matter what to be able to mine.
Okay,
Like
so
so
always making sure that you are creating fees for
you
Bitcoin
have to
L1.
create fees for Bitcoin L1. Otherwise, what is the point of actually being an L2 if you are not contributing back to the base? And I think that's key and critical. If you look at it, this is actually one of the issues that Ethereum is facing right now. So if you look at base and optimism, there are more fees generated to optimism from base than optimism to ETH L1. Like that's absurd. You have to contribute back to the L1 no matter what, because that's where your economic security is. That's where your consensus mechanism, that's where your proof of stake or whatever it may be is. That's where it is. And then you're dependent to scale it on the L2. But if you're not actually contributing to the L1, what are you doing?
It's sort of this like interesting question, right? Because and Michael Casey, who's a big into merger mining, as you know, we talk about this all the
Mhm.
time, right? Like there's sort of this conflict between, oh my gosh, we need to keep fees. We need to like make fees cheap enough that people
Bitcoin
can buy
fees do
coffee.
not need to be cheap. Like that is not the point of Bitcoin anymore. The point of Bitcoin is not to use it as everyday money. Now the point of Bitcoin is to use it as inflationary hedge money. It's very different than where we were. And so personally, I think fees should be higher.
Yeah. I mean, obviously, as an ordinals stan, I kind of agree with you.
Fees should be
We're fee
higher.
maxis.
Well, fees should be higher just because it's not meant to be cheap. Bitcoin, to actually use Bitcoin, you need to pay your fair share for the block space.
But there's sort of this fundamental tension, right, between like, okay, how do we get people like, how do we like enable people to be able to buy coffees with Bitcoin, L1, L2, whatever it
Sure.
is, right? And how do we make sure that miners get paid forever as the subsidy declines?
Well, you know what? If people want to buy coffee with Bitcoin, use a Bitcoin backed stablecoin. Use a stable coin, secure it on the Bitcoin network, and have that be the fees.
So this is sort of like the big question is creating this sort of like moderate middle ground where the L2s are paying some kind of fair share to the L1 so that miners get paid and Bitcoin L1 stays sufficiently decentralized. But ultimately, also, you have a layer where people can do their coffee buying, essentially.
You want to have both. And I think if people are going to do coffee buying, like I truly think you may not want to spend BTC for that, but there doesn't mean that you can't have a BTC backed asset. I know there is Tethered, I believe, going on Taproot. So that is like a example. There are other stable coins in the Stacks ecosystem that are secured and backed by Bitcoin. So there are different options.
Where do you see this going in like 10, 20, 30 years? Like end game, is Bitcoin a medium of exchange or is Bitcoin only a store of value and we're still using fiat currency as medium of exchange?
I don't know if Bitcoin will be a media of exchange. Like here's like kind of my take. Right now we have more and more Bitcoin becoming institutionalized and but we're also getting mass adoption and we're getting mass adoption now through ETFs. So you have a spot ETF, Bitcoin
They're
is going in.
institutions.
Exactly, issued by institutions, but now retail can purchase Bitcoin through their retirement plans or such. More of that, all of that Bitcoin, cold storage custody to a bank. So we've like regressed in that, and from that standpoint of self custody to now going back to banking custody because it's account abstraction easier to get Bitcoin in that way for some people. Now, when you have more and more Bitcoin going into cold storage custody, you don't have as much Bitcoin circulating in supplies like free market per se. So we're at this point of what, $80 billion are now in Bitcoin ETFs. I don't know what the fact is today, but somewhere around that ballpark. So that Bitcoin will no longer be used to generate more fees for the miners or things like that. Like it's not going to be used. And so my position is I need to preserve Bitcoin as free market and available for anyone and everyone. That was the entire point of Bitcoin, global financial inclusion. And when you're putting it back into ETFs, where you need to KYC, do all of the hoops and ladders to just acquire Bitcoin in that way, are we net doing something better for Bitcoin?
I mean, it's a fair point. Is your goal to, and this is something actually Giannis and I were talking about the other day, is like, so we have two options if we don't scale Bitcoin correctly. Basically, there's never a universe where everyone's going to be able to use L1 for all of the things. So we have two options. We either create like effective decentralized scaling solutions, which maybe does include making sure that we have a soft fork for something like OpCat, which is probably
Totally.
going to be our next chat. Or everyone's just going to end up doing everyone's just going to be end up custodial, right? Those are sort of the options on the table. Do you have a response to that?
Scaling solutions are going to be the only way. The point of Bitcoin was not to be custodial. The point of Bitcoin was not to be held by banks or anything like that. Like, I'll even go on the opposite take. I know Bitcoin strategic reserve is in a lot of people's mind. I don't like it.
Really?
I don't like it because
The number go up, maxis like
the
it.
number go up. Like, I get it. Everyone wants to create more value for Bitcoin, and Bitcoin will ultimately be one of the few venues where you can settle your debts. Let's put it that way.
Okay.
But when Bitcoin is held in strategic reserves and not being actively used, it hurts. Like, that's kind of my take. Like, if you're going to do a Bitcoin strategic reserve, then find a way to stake it or find a way to deploy it in DeFi. Let it be usable. Let people actually have free Bitcoin markets for products.
So you're a Bitcoin utility, Maxi.
I am.
Do you think that that's really necessary, though? Like, some folks deciding to hodl doesn't really influence whether or not I get to stake or, lend against my Bitcoin. I mean, it doesn't hurt me. I still get to do whatever I want with my Bitcoin, regardless of
Everybody
whether.
has the freedom of choice to do whatever you want with your Bitcoin. But if you want Bitcoin to actually continue to accrue value,
You mean like utility value, basically,
then
and paying fees. I mean, that's maybe like the
that's
bigger,
kind of the point. Like,
right?
if you're just gonna hodl your Bitcoin and
You're
then
not paying miners. You're
then
not securing the
you're
network.
not securing the network, but ultimately what happens in 2050 when the mining subsidy is
Gone.
effectively zero?
I mean, I think it's going to be effectively zero faster than people
Oh,
think.
yeah,
Right? Yeah.
it will be, but what happens then? Then at that point in time, like, you better hope that you've created a robust,
Economy.
DApp economy to use Bitcoin. Otherwise, so, like, I'm future proofing from, like, the way that I frame this of I wanna see utility on Bitcoin,
Hmm.
mostly because, like, in the back of my mind, I know mining subsidies will be gone.
This is a really fair point that
But this
yeah.
is, like, where people don't wanna think about it because you're in the moment for today and my bags today, but I'm in the moment for generations to come.
This is a super important point that I think a lot of people are not talking about is, because I even just now I'm having an aha moment like, oh, well, you can hodl and I can still use my Bitcoin. But ultimately, the people who are going to secure the network are people who are using Bitcoin. If there's no Bitcoin utility, you're
Then
not going to
what's the
secure, you
point?
can't secure the network in
And
40
let's
years.
be honest, mining is incredibly difficult. It's not an easy process to be a Bitcoin miner. There is a lot of upfront setup costs and infrastructure. I used to mine Bitcoin, like, I think you know this, my background's in petroleum engineering. I worked in oil.
My
It,
favorite thing about you, by the way.
yeah, and so, like, I know how energy grids work and such, and thinking about the amount of electricity and cost to sustain the electric grid to be able to mine Bitcoin, like, I do think about these things every day. And if I want Bitcoin to be around, then I need mining to continue to be around and earning fees and validation. And to do this in a scalable way and not future proof of what we're going to provide value for later, not too many people want to talk about it.
Okay, this is my favorite point of this episode, I think. This is something I just like really hadn't thought about is like, okay, yeah, sure, hodl away,
We can
but just know that the hodlers are not contributing to the security budget and I mean, everyone's sort of acting like fees will just take care of themselves, but I mean,
no,
certainly we know that
fees will
that's not
not
true.
take care of himself. Like, we have the duty to actually make sure Bitcoin fees are generated. And, like, this is my favorite thing about Stacks is that we made it a part of our consensus mechanism from day one and never pivoted.
To make sure that fees are always paid to Bitcoin. Interesting. Okay, so this is sort of a good because I think we have like probably not too much time left. let's talk about Stacks ecosystem building and sort of how, I mean, you mentioned before sort of like the decentralized nature of how you kind of set everything up from a regulatory standpoint, but how do you build, a thriving DApp economy, if you will, right? Like what are best practices there? I mean, you guys are way ahead of the game, I think, on this relative to anyone else. We just
Yep.
mentioned XVerse was a stack company, Hiro. I mean, all of these.
XVerse, Leather, Gamma, Hiro, all of these, we build on the Stacks L2, but we also build on the L1.
So technically, and I don't think we mentioned this, so your title is COO of Trust Machines.
Yes. So Trust Machines is a company that builds Bitcoin products. So we build primarily on the Stacks layer, but we have built products that contribute to Lightning too. Like we have been building all across the board because ultimately we just want to see a Bitcoin economy. Now we do favor the Stacks layer because we truly think it is the best layer to build on.
And the concept of Trust Machines was built on the idea of building out the Stacks ecosystem, essentially. I mean, that was like the
Like
thesis.
building out the Stacks ecosystem, but more so building out the Bitcoin economy. So many of our products do touch Stacks, but there are products that don't touch Stacks too. So we're going at it from different directions. Like one of our products is called Dot Locker. It is a namespace that is on the Stacks network, but it is an ICANN TLD. So anytime you buy a domain at GoDaddy or Two Cows or wherever for Dot Locker, you have to create a Bitcoin wallet.
Did Manib, I mean, was he the founder of Trust Machines?
Manib is our CEO.
How would you, so Manib was the creator of Stacks. So Stacks came first. Stacks Foundation was not a thing at that point. I mean, was it just
Stacks Foundation was launched in 2021. So
how did
after
this all develop? Like, how does this work? So, like, he comes up with his idea for Stacks, and then what sort of?
he comes up with this idea for Stacks with an incredible team of engineers and like tinkerers behind him, and they build this network and they launch this network. Now you're going for not sufficient decentralization, max decentralization. So Manib then steps into a new role. So he's no longer doing this. So Manib is not at Stacks Foundation or anything like that. He is putting his builder hat back on and he's building products. So it's
And but the way that he did that was through the creation of
Trust
Trust
Machine.
Machines.
Yes.
So Trust Machines was sort of the second entity of his creation after the Stacks Foundation.
So the original entity that created Stacks and launched Stacks was called Blockstacks.
Okay.
That was the one that did the regulated sale and everything like that. That was rebranded as Hiro because once you finish the sale and you've launched the network, to sustain the network, you're going to need developers, dev tooling, and such. So Hiro
And that's
became
Hero's mission is developer tooling. Like, what do
developer
we need to
tooling,
build this thing?
all
Okay.
of the infrastructure and kind of programming environments developers need, libraries and such to be able to create products. So Hiro fulfills that mission, but then you have a foundation, Stacks Foundation, that does governance, community, kind of sustaining what community and ecosystem building could look like.
And the Stacks Foundation is a nonprofit foundation, unlike Hiro, for instance, which is a for-profit company.
Hiro is a PBC, if I'm not mistaken, a public benefits corps.
Okay.
Yeah.
Okay. And so what does that mean? Like, how does that work? Is that kind of like a nonprofit? Like,
I wouldn't know because I've never been
okay.
employed by Hiro, so it would be difficult for me to answer that.
Okay. But there's some sort of like key distinction here. So it starts with Stacks, which was Blockstacks at the time.
And then
Blockstacks essentially splits into like Hiro
and
and
Stacks
Stacks Foundation.
Foundation. So development was then
And the Stacks Foundation is a nonprofit, or no?
I
Not sure
don't know
either. Okay.
either. I don't believe so.
Okay.
But they're not
But their
not a
role is decentralized governance,
decentralized
essentially
governance
managing
and community.
decentralized
So
governance.
they administer grants to support our builders. They have a grants program.
Okay.
They're taking on critical community roles as well. And then
Do they support like consensus infrastructure, like these validators and things like that? I mean, is that Stacks Foundation or is that Hiro?
Stacks Foundation
Okay.
offers grants for almost everything. So product building on Stacks, or if you want to have media about Stacks, or if you want to build infrastructure, everything that allows the Stacks ecosystem to grow, there's a grants program for that.
The
And
validators that are like making up the consensus mechanism, like who's sort of
yeah, so that's
organizing that?
so the governance is done through Stacks Foundation, and it was a SIP process for who would be the new validators as part of the Nakamoto upgrade. So With the Nakamoto upgrade, our validators, which we call signers, is a decentralized group kind of elected and voted on. And so there was a proposal out for the SIP to have 40 different validators.
There's 40.
There's 40, but to do the governance, you need at least 11 out of 15, if I'm not mistaken, something
Okay.
around
So
that.
in order
But
for like
these,
a, yeah,
but these are not your everyday validators. So this is like the special thing that Stacks did that now I could see being copycatted across the ecosystem. Our validators are a mix of institutions, a mix of Stacks builder entities, things like that. So think about like our validators are BitGo, Copper, Kellen,
major
Coursera,
institutional
major
players.
institutionals coming in because they believe in Bitcoin L2.
And they're all published,
It's
right?
all public. Everything is in GitHub, in our repos, all the everything.
Everyone's identified. Every signer, it can be like
Everyone's identified. XVerse is one of our larger validators as well. So like
interesting.
it was very conscious to make sure that you had representation all across the board so that no one would do no evil. Let's put it that way. We we care about how things are curated. We care about decentralization, and the stackers will choose.
I was going to say, what was your criteria for, choosing your validators?
We didn't choose them. The stackers got to vote on them. I like that's the best part.
The stackers. Okay.
So that's the best part.
And the stackers are basically the stacks miners.
The
Okay.
people who are securing the network with their STX and staking. But yes,
Okay.
so there was a lot of work in the BD working group, which I lead for as part of Stacks, on um, building relationships with a lot of these institutions that typically, if not supported Stacks or come into Stacks to show the value of a Bitcoin economy. That
Mm.
was key and critical. And then a lot of them approached us as we were building this new consensus mechanism of we want to go further. We want to support you. Can we run a node? And we're like, you can run a Stacks node, but you may want to consider putting putting full force and actually validating our network. And many
Mm.
of them really wanted to do that because you want to show that not only do you believe in the asset value and the value creation, but you want to believe in your builders too. And so by validating our network and validating and securing and becoming that signer, it is doubling down on builders. And that is the most important thing. Most crypto ecosystems kind of take it from different approaches, but I'd say Stacks has always been developer and builder first, and that has not wavered. Actually, in the Electric Capital report that came out from this year, Stacks is the seventh fastest growing developer ecosystem. There are more developers in Stacks growing than contributing to Bitcoin Core.
Wow.
And like and like Stacks, like this is like compared to like developer ecosystems, like you're fighting against like, let's say very robust
Mm,
other ecosystems like Solana and Base and things like that. So to now come up as number 7,
mm.
big deal.
I don't know if this is a spicy question, but I'm going to ask it. How much of that do you think has to do with the fact that you do have a foundation that has like a healthy grants program and things like that? I mean, how many of these developers are receiving grants?
Not that many actually. So we do a lot of we do a lot of hackathons. Like the Harvard hackathon had, or the like Cambridge, like Harvard MIT hackathon had thousands of participants. Like we do hackathons all around the world, not just here in America. I think Vietnam, Hong Kong, Singapore, there is a hackathon being in Africa. Like we want people to build on Bitcoin, and so we need to educate them and we need to give them the rails to do so.
Interesting. And that could be some of these folks are Bitcoin developers who are integrating Stacks in some way. I mean, is the Stacks
Or
integration
they are developers from other ecosystems that want to come back to Bitcoin. They want to come back home. I
interesting?
think we're here at ETH Denver, and this is like a point I want to make. There has been more exit liquidity in Ethereum now more than ever. The narrative has flipped of it used to be, well, Ethereum's going to flip Bitcoin, Ethereum dominance, but we are not in that era. Like Ethereum is having challenges
Yeah, that thesis is not playing out.
that yeah, Ethereum is having challenges and developers are now thinking, if I'm going to launch my project, there's only like two questions to ask of do I want to launch it with Bitcoin or do I want to be in something monolithic like Solana? That's
Right.
really it.
Right. Okay, so just to sort of wrap up, this is a really great, I think, kind of like overview of sort of how the ecosystem works. And also is just sort of an example of how these sort of giant mega L1 ecosystem works more broadly. Okay, so Hiro and so Blockstack splits into Stacks Foundation, which is
Stacks. So yeah, block stacks.
and
You
Hiro.
go through the regulated sale. You're breaking up the treasury. So you have block stacks now is Hero. You have a Stacks Foundation.
And
As
then
the
trust machines.
well, we weren't a part of. We came a little bit later,
Oh, you came later.
a little bit
Okay.
down the line. But then other entities were created. There was Damon to do Stacks mining. There was XVerse seeded. So like a
Oh,
lot.
interesting.
So a
A
lot.
wallet, the wallet. You need the miners, you need the
So,
wallet, you need all the
like
pieces of
a
the
lot,
ecosystem.
you have to build a lot of different things just so that you can actually have an ecosystem. And then where trust machines came was we fundamentally realized that more dApps needed to be built. And look, if you're a builder, to go through raising a seed, building, learning, and getting there is a lot of work to go through a go to market. And so Manib was like, you know what? Let me raise capital and let me make sure that we're building a ton of products and getting them out to the market and have a team who are just incredible and like passionate about Bitcoin ecosystem, Bitcoin building, because you can try to do this in a different way of like bringing new builders in, but you want to make sure they still fit your mission at the end of the day, whether you're employed by me and my entity or somewhere else, doesn't matter, but the mission is important. And so at Trust Machines, we've built quite a few different products all on Bitcoin, but my favorite is a DeFi oriented one.
Okay, so final 60 seconds. My ultimate question to you is what's the end game here? Does all of crypto basically collapse onto, let's call it broader Bitcoin ecosystem for DeFi? Or, how do you see DeFi broadly playing out over the next, let's call it 10 years?
I think DeFi will have two different kind of verticals. You will have crypto casino DeFi, which will not be on
Like the
Bitcoin.
Solanas of the world.
You'll have all of that kind of yield farming, very complex structured products in other ecosystem, but Bitcoin DeFi, in my opinion, will be cleaner, simpler, and quite frankly, more vanilla.
Lending, staking
Lending, staking, using your Bitcoin as collateral.
to
That
be
is the
productive.
thesis. That is the thesis in it. Because if I have Bitcoin, I don't wanna jeopardize it for 50% yield. That doesn't feel right. Like, this is a hard, pristine, precious asset. But I would be willing to, use my Bitcoin to get a loan, to do other activities, whether it's trade, whether it's meme, who knows what I wanna do, but ultimately, I'm going to take profit and buy more Bitcoin.
Yeah.
At the end of the day, Bitcoin DeFi is all about accumulating more Bitcoin.
Makes sense. And assuming the trust assumptions are manageable, right? I mean, that's really the bottom line.
I think it is, but there's been so many innovations in Bitcoin DeFi. So, like, we just launched Granite last week. It is the Aave-style lending protocol for Bitcoin.
Full circle.
But what's special about is like we got the experience to learn from a lot of the mistakes in Ethereum DeFi and other
Mhm.
DeFi ecosystems and make sure that that doesn't touch Bitcoin. So in Granite, it is extremely borrow friendly. You cannot rehypothecate the assets. The markets are isolated, so there's no cross pool risk. Um, Rather than doing a full liquidation, it's a soft liquidation. So you just get your LTV, so almost like a margin
Is
call.
it a time lock? Is it multi-sig? Like, what are the trust assumptions with Granite with this Bitcoin lending?
Well, it is built on the Stacks L2, so you have the
Okay.
trust assumptions of Stacks L2.
Okay. Makes sense.
But
Interesting.
but at least it's scalable because this is the thing. A lot of people do Bitcoin DeFi in the L1 and it's an awesome experience,
Mm.
but if you want to do some of the more structured, let's say perpetuals or things like that, a 10 to 30-minute block time is not going to cut it.
Yeah, no, of course.
So
Wait, so is there a bridge? A final last question. Is there a bridge between Bitcoin and when you say it's on the Stacks L2, so it has the trust assumptions of Stacks L2, but I want to put my actual L1 Bitcoin to work. What's the trust assumption of the
So
bridge?
if you're going to put your actual L1 Bitcoin to work, you're going to mint SBTC and you're going to use that bridge. So that is the bridge run by
And that's a
all
federated bridge.
that is the bridge run by all of the validators, the professionals, the ecosystems, everyone kind of
Got
coming
it.
together.
Cool. Awesome. Oh my gosh, Rena, this was so great. Thank you so much. I feel like I got the full Stacks download.
Can I share one last thing if
Go
you don't
for it.
mind? So obviously Stacks is trust minimized. Like I'm not saying that we're trustless, but the end goal for Stacks is to be trustless fully. And so we are looking at innovations like BitVM to ultimately upgrade our consensus one more time to be fully trustless.
I love it. I love it. I guess somewhat debatable about BitVM being fully trustless, but it's pretty effing
But
trustless.
at least we're going in that innovation
Right.
direction.
And I'm sure you guys will take advantage. Sounds like you guys will take advantage of something like OpCat if that occurs. And it sounds like, do you take a position on OpCat or Covenant's proposals generally?
We're supporters and we want to see it happen.
You heard it here. There you go. Thank you, Rena. This was
Thank
perfect. Thank you
you.
so much.
Appreciate it.